Okay, good morning, everyone from Washington, D.C., World Bank headquarters. Welcome to the Agricultural Finance Support Facility AgriFin Program webinar series. This is the 19th webinar in our continuing series. Today's topic is designing loan products for agricultural clients, lessons from Cambodia. My name is Tom Moyes. I'll be your facilitator for today. Just a brief reminder about AgriFin. What is AgriFin? We aim to catalyze learning about successful agricultural finance models through the sharing of practical information and the fostering of peer-to-peer exchange. Our webinar series is one way that we accomplish this goal. Through the webinar series, we engage commercial bankers to share their insights and experiences with you on a specific product, process, or policy that works well in their respective markets. So today I think we're very lucky to have Mr. Yanit Chang. He's the head of credit at Amaret. Amaret is a microfinance depository institution based in Cambodia. Yanit is highly experienced, has more than 10 years experience in microfinance, managing microfinance institutions. His specialty is credit and credit product development. He's also very experienced in training, coaching of credit officers and managers. He's going to be sharing lessons today from Amaret's, I think, very interesting experience designing and rolling out loan products for farmers in Cambodia. Specifically, what he's going to cover are the how they develop loan products for different segments of the farmer market, primary producer market, and then he's going to talk about the marketing and delivery of new loan products, how they manage that process, and a little bit about managing risk. Before we get started with Yanit's presentation, I just want to make sure that we all understand the ground rules, how we're going to run through the webinar. We'll start with Yanit's presentation. I think it's going to take about 25 minutes, roughly, might go a little bit longer. That will be followed by a question and answer session with Yanit, and that will go for another 20 minutes or so. So how are we going to manage the question and answer? What we want you to do, if you have a question at any time during the presentation or afterwards, you can type that question into the chat box. You'll see it in the lower right-hand corner of your screen. Type the question in there, send it to us, and we will try to gather up all those questions and then at the close of the presentation walk through all of those with Yanit. We're going to end, by the way, promptly at 10. Okay, and with that as introduction, Yanit, can I turn it over to you?
Please. Yes, please. Hello, Tom.
Okay, Yanit, you're on.
Yeah. So can we start? Can you show the slide presentation?
Yes, I think the slide presentation is on the screen. So go right ahead.
Oh. Okay. Many thanks, Tom. Good evening, ladies and gentlemen, from Amaret Microfinance Cambodia. I am going to talk today about the Amaret experience in agriculture credit product design to serve our upper segment clients, which we call AgriFin credit products. To start with, I will briefly you about Cambodia. About Cambodia. Microfinance and banking system in Cambodia, Amaret microfinance history and financial situation in brief, Amaret AgriFin project in brief, Amaret AgriFin product development process, and the lesson learned from this project. Please do feel free to type your question, and I will try to answer all your questions after my presentation. Let me introduce you about my country. Cambodia is the one of the country in the Southeast Asia. It's bordered by Thailand, Laos, and Vietnam. In 2012, 2013, and 2014, Cambodia obtained the World Best Rice Award at the annual TOT World Rice Conference in Bali, Indonesia, in Hong Kong, respectively. Our population is around 15 million people, which is 80% of them are rural people. Our GDP per capita is around $1,000 in 2013, and GDP grow around 7% per annum.
Yanit, can I just cut in? I think you'll need to manually go through the slides. So there's a box above the presentation with arrows, and you can click through those, and then the slide presentation will move forward.
Yeah, thank you.
Okay.
Thank you.
All right, good. Sorry for the interruption. Go ahead.
Yeah. Around 62% of our population is aged between 15 years to 64 years old. The literacy rate is around 73%. And our major three economic activities are agriculture sector, around 37%, industry around 22%, and the service around 36%. Our currency is Khmer. That's all for my country in brief. Now just would like to brief you about my country microfinance and banking system. By the end of the year 2013, we have 35 commercial banks, 40 licensed microfinance institutions, including 7 microfinance deposit-taking institutions. Table on the left hand show that among 40 licensed MFIs, its loan outstanding is around $1.3 billion, with the active borrowers around 1.5 million borrowers. Deposit balance ratio to the total loan outstanding of the all MFI in Cambodia is around 34%. All microfinance in Cambodia lend to agriculture sectors around 39% of their total loan portfolio. Trade and commerce is around 24%, and the rest is to service, construction, and the consumption, etc. Okay, so now let me brief you about Amrat Microfinance Institution. Actually, up to now, we have more than 20 years experience in microfinance lending activity.
It's online.
Again, Yanit, can you move the slides forward? I think we're on slide number 9 now.
No, number 9. Amrat is we created in 1991, and in 2004 we got the we transformed from ANT to the rename to Amrat. And 2009 Amrat received the additional license of microfinance deposit-taking institution, and we rolled out T24 system, the new system, in 2012. This table, it just shows you about the some brief of the Amrat operation and the financial highlights. By the end of September, Amrat was operated in the whole country of Cambodia with 124 branches. We have 2,874 staff in the total, and we have around 334,000 active loans accounts, which is around 65% of them are agriculture clients. Amrat also has the loan outstanding around $279 million, and the total deposit around $148 million. Our asset is around $330 million, which is funding from the liability around 83%. Our net profit is around $13 million by September 2014. Just very quick about the AgriFin project, that in early 2013, Amrat has signed a grant agreement with the World Bank on the AgriFin project. There are 2 components in the project with the World Bank. The component 1 is focusing on to develop the suitable agro loan offer and set up an agro credit unit within the credit department. And the component 2 is to develop secure financial system in the rural area. This is just only the main objective of the component 1, that we develop the suitable credit product to serve the different segments of the farmer, like the Tom already mentioned. Also, to develop the partnership in the order to increase the impact on smaller farmer and improve risk monitoring of the agri portfolio. So basically, there are four main steps of the umbrella credit product development. For AgriFin product also apply the same stage. The first stage we call preparation of the product development, which are including market study and the form up product development task force team. Stage 2 is divide credit product feature, pricing, methodology, forms, and the system parameter. And third stage is launch of the pilot test, which for AgriFin project we spent around 1 year from July 2013 to July 2014. By the end of the pilot test, this stage also includes the pilot test evaluation and conclusion for the rollout stage. And the last stage is the rollout. Let me start with the stage 1 that we call the market study. Actually, for the objective of the market study for AgriFin project, the main is that to check out with our existing agriculture clients, farmer, about their potential credit worthy. Hello. Its sound is not really good actually. And secondly is characterize potential target segment and their needs, mean to be checked on their characteristics, need for the financial services, and understand on how agriculture activity works, such as cash flow, seasonality, etc. Okay, so based on the interview with our 200 prospects, market study results show that 39% of our respondents are interested in a loan from UMRED. 23% of them are interested in a loan from UMRED with loan amount about $3,000. The average loan amount would be $2,837. Please note that this average loan amount needed by the farmer seems a bit high if we compare to our existing agriculture clients, which was disbursed around $1,200 in average so far. So that's why we call them the upper segment client for UMRED for AgriFin project. The below graph shows you that the interest in the taking a loan from the UMRED is much higher among the dry season dry growers and the animal breeders. From a regional point of view, farmers from Kampong Cham show a high interest in UMRED loans. For the main product feature, I will present you more detail in the following slides. So let's go to the brand organization. Actually, based on the potential of Cambodian agriculture sectors, and also UMRED would like to specialize in agriculture lending, we decided to create one new dedicated agriculture credit officer position to serve upper agriculture client segmentation, which is need loan amount more than $3,000. And also we select some of our existing credit officers in pilot test branches to apply AgriFin methodology in order to test their productivity workload as well. We call them hybrid credit officer, meaning that hybrid between our existing individual credit methodology and the AgriFin methodology. So now let's take a look on the divide credit product feature stage. The main objective of this product design is create one agricultural loans that most suitable with our farmer cash flow, their seasonality income. That's why our slogan is agricultural loans suitable for the farmer. As you see in the picture on the right hand, we target all kinds of the farmer who engages in wet or dry season dry grower, non-dry growers, animal breeder, etc. Farmers are eligible to apply loan with UMRED if they have experience in farming activity more than 1 year and at least has 2 different sources of the income from their agriculture activity. Otherwise, the loan can be granted only 50% of their project. AgriFin loan also offer to our existing agriculture client and the new clients. So, to meet with our objective as mentioned recently, we introduced the new flexible repayment schedule to the farmer, which means the installment plan is adapted to the activity cycle and the result of the cash flow analysis in order to satisfy with our client, but also better managing the risk. In AgriFin product, we also try to set loan amount which is more suited with the farmer and the better risk managing as well. That's why we come up with the 12-month loan term for agriculture working capital purpose and up to 36-month loan term for agriculture investment purpose. This due to agriculture working capital input and the output need finance around 1 year, based on our experience and the answer from our prospects. Market study results also show that 78% of our respondents borrow loan for agriculture activity from financial institutions in Cambodia less than 12 months or 1 year. 86% of the respondents interested in a loan less than 12 months, and also aligned with the local and the international best practice for the agricultural lending for the working capital. As clients are very sensitive to the interest rate charge and the market is competitive, 38% of the response had a loan from the bank and MFI. We decide to reduce the interest rate charge of 0.1% compared to our standard one, but we compensated by the upfront fee processing fee 0.5% of the loan amount. So in summary, this table shows you the AgriFin product picture, very in brief, that you can see that the loan purpose we funding for the both working capital and the investment. So client can borrow for the buy agri input and more labor cost for the working capital, and investment they can borrow to buy the agriculture equipment like the tractor, agri lands, agri construction, etc. And this product we sell the client both back office and front office. Back office means that the client disburse and reimburse at the client home, and front office meaning that disbursement and the reimbursement at the office. We sell both Khmer and US dollar, and in the rollout stage we also have the Thai baht. And interest rate charge we are based on the loan outstanding. And the monthly interest rate we calculate based on the loan outstanding, and the interest rate charge is compared to our commercial is decreased by 0.1%, and also the upfront fee is 0.5% from the approved loan amount, and the minimum loan size is $3,001, and the maximum is $15,000 US. For the loan appraisal methodology, we use the AgriFin methodology that we call new IC Agri methodology, which is have the cash flow analysis, more deeper analyze on the client activity, etc. And actually, the client can apply this loan, but the minimum is 3 months. And for the loan term, as I mentioned, is working capital is 12 months and investment is 36 months. And the rest of the product feature is the interest payment is a monthly, but the principal is payment is flexible based on their seasonality and the cash flow analysis. And the grace period also possible to offer, but the maximum is 6 months. And if the client late some days, so we will penalty them 0.1% of the overdue amounts per day. And admin fee will be applied if the client overpay principal amount within the first 2 monthly installment of the repayment schedule. And loan rescheduling, we have no the policy. And in order to manage the agriculture risk, AMRAT also setting up the exclusive list or exposure limit to certain agriculture sectors for our loan concentration risk. For instance, AMRAT limited loan to paddy farming around 30% of the total loan portfolio. We also limited numbers of the loan account with AMRAT. which means that the client can have the maximum 2 individual loans account, but client should have enough repayment capacity. So AgriFin pilot test was conducted full 1 year actually, from July 2013 and to July 2014. We pilot in 14 branches with the 36 agriculture credit officer and 14 hybrid credit officer. This picture is show you about our agriculture client activity that in brief that mainly are the paddy farming, or we can say dry season dry. If we look to the quantitative result by the end of the pilot test, AMRET had disbursed 1,265 AgriFin clients, meaning that the upper agriculture clients, with the total loan amount disbursed around $7.5 million US. And if you look to the non-performing loan, is very good. It's still 0, and the average loan size actually by the end of the project we disbursed around $6,000 US, and nearly 50% of our clients disbursed are the new clients. In addition, in order to evaluate and conclude our pilot test, we also conduct the market research with our 28 AgriFin clients. That the results show that 46% of our client interview are the female and age 43 years old in average. 32% of them are satisfied with AgriFin fast service offer. 21% are satisfied with AMRET staff characteristics and relationship. And most importantly, 96% is satisfied with our flexible repayment schedule method, and 75% of them are satisfied with our requirement of the collateral, and 86% of them are satisfied with AgriFin lending process. So, experience from the AgriFin pilot test show that if agriculture credit officer disburse up to 37 active clients with the loan outstanding around $204,000 US, this agriculture credit officer can break even on the direct cost in the month 8. So this graph is just show you the when the our credit officer can break the even on the AgriFin project, and if we apply only direct cost. So this is just a key assumption for the to support the calculate on the break-even points. Based on the pilot test evaluation on the AgriFin product picture, market, client preference, and the break-even point, finally, AMRET management decided to roll out AgriFin product picture to all branches. AgriFin methodology will be trained to all credit officers at AMRET due to there is a market for the upper segment clients. New AgriFin product and the methodology is adapted to the market. And AgriFin product picture and the methodology will be fully rolled out to all AMRET branches by the end of the Jan 2015 next year. Last but not least, AMRET has learned a lot from AgriFin project, such as there is an unserved market for the upper segment individual credit agriculture clients, because most of our client disbursed are 50% are the new clients. Number 2, it's a bit difficult to recruit credit officers who specialize in agriculture and banking sector at the same time. Agri-credit officer is low productivity if we compare to the normal credit officer, our normal existing credit officer, due to the seasonality issue, spend more time on the loan assessment and larger operational area. Please note that ACO here, agriculture credit officer, disburse in average around 6 clients per month, but our GCO and SEO can disburse up to 10 or 11 clients per month. And number four is that the manageable risk for the lending to the agriculture upper segment is still good, because when we pilot this 1 year, the non-performing loan is still 0. And number five is that make Amrit more competitive advantage in the market and enough risk mitigation. And the last one is we also have a big challenge on the T24 development to adopt the new AgriFin methodology, especially the repayment schedule defined in the system. So that's all for my presentation, and thank you very much for your attention and listening.
Thank you very much, Janet. I think that's a highly detailed presentation with a lot of good practical knowledge coming through.
Okay,
we have some questions coming in, but I'm going to take advantage of my position, Janet, to ask you the first question. It seems like the sort of a segment of commercial type farmers should be very attractive to other banks. I'm just wondering how competitive is the market there for banking these more commercial farmers, and do you find that you're taking these clients away from other commercial banks?
Actually, if we compare with the commercial bank in Cambodia, most of the commercial banks are focusing on the trading and commercial, and as well as the salary worker who are consumed for the housing loan, consumption loan, that a bit higher loans amount. So that's why for this new segmentation, actually, we are faced with some of the microfinance that also show and disburse the loan at the same sector. This is our challenge. But for the bank, there is no really potential issue with our market segmentation. Wow,
that's great. I think that's a great opportunity for you that you are exploiting. I've got some questions coming in, Janet, so I'm just going to start throwing other questions at you, okay?
Yeah, please.
Okay, so I have a question from Steve Chenjo, and sorry if I don't get the names, pronunciations absolutely correct. Steve says, how do you deal with potential risks such as crop disease or any risk related to climate change, i.e. sort of questions about natural risk? How do you deal with that?
Okay. We actually, to deal with the climate change or the damage of the crop, so that's why in our credit policy, we define that at least the client have the 1 year experience, in the, what we call in the agriculture activity. Why 1 year? The logic is that the client able to manage the risk that may be happen in the future for their crops. And number two, in our policy is that at least the client have two main source of the income from the two source of the different agriculture activity, in order to manage the risk that if they have some of the risk for the one crop, they have another crop to compensate or maybe to able to pay for the Amrit. In addition, Amrit also provide some of the consultant with the clients, okay, to consult with the clients about their agriculture activity, and as well as to educate them something about how to manage or to make a good crop. In recently, Amrit also have the partnership. We build a partnership with the agri input supplier. Like the IDE or UCA. We are nearly reached the MOU with them, that they are specialized in the educated to the farmer on how to produce and the crop, the more yield, and also the risk mitigation in terms of agricultural techniques. Yeah, I hope I can answer. I answer to the question.
No, I think that's a very complete answer. Just to review, in terms of credit risk, when you do the client selection, you try to select the more experienced farmers. You also have a credit methodology, which you call it the new IC Agri methodology. So you're doing some evaluation of the operations of that farmer. And then
Yeah.
you look for diversification of income streams at the farm level. So I think that's quite interesting approach, very robust approach. Yeah. Okay, so next question, Yanit, I've got from Kathy Zizimopoulos, and it's related to how you charge the interest rate. Is it a flat interest rate or based on principal outstanding? And do you have, and she's also asking about the percentage in your portfolio of rural clients versus urban clients. I hope I've got that right, Kathy.
Yeah, regarding to the rural client, I would say nearly 80 to 90% of our on the client recently are the rural people. Yeah, and for what the other question? Sorry, Tom.
Okay, so the other question is related to the interest rate. Do you charge a flat interest rate or on declining balance? How is that done?
Yeah, thank you very much, Tom. It is a declining method. Monthly interest rate charge is calculated based on the loan outstanding the client has. Yeah, we based on the loan outstanding of the client.
Okay, that's good.
Yes.
I've got a question from Javier Lecachure. He asks, do you intend to cross-sell other financial products such as microinsurance or savings or deposit products?
No. In Cambodia recently, we don't have the microinsurance and or the rest of the agriculture facility, actually. We not yet have.
How about, do you require your borrowers, for instance, to open a savings account or a deposit account?
Actually, for the in the system, we are what we call involuntary saving. Actually, we are not voluntary. So actually, for the front office, the client that who comes to disburse and reimburse at the Amrit office, we open one of the saving account for the client. But the client, this saving account is for the client repayment and as well as for the client put the money if the client wants to be sold, and then we give the client with the interest rate. So there is no any voluntary saving.
Okay.
Requirement. Yeah.
So you basically require them to make deposits into their savings account.
Yeah, yeah.
Okay. But then after their loan is repaid, they have access to those funds?
Sure.
Okay.
They will
okay.
Yeah.
Okay, here's another question, Yanit. It's from Emily Enad, and she's asking if you do any kind of evaluation of your farmer clients to see whether the financing that you have provided has improved their situation. Do you do any of that kind of customer evaluation?
I'm sorry, I'm not really clear on the question.
Okay, let me see if I can rephrase it. So you're lending money to farmers who are investing in their farming operations mainly, it seems like, and then she's just wondering whether you do some kind of, in addition to that, an evaluation of the impact or the effect of your lending on those farm households. Are they improving themselves? Are they rising? Are they doing better as a result of having access to your funding? I think that's
okay. Thank you.
I think that's. I'm interpreting your question, but I think that's what you're trying to get at, right?
Okay, thank you, Tom. In order to respond to your question, actually, as I showed you so far, that around more than 60% of our clients are the agriculture people, and mostly of them are the group loan clients. So if we go to our group loan client who are the small scale farmer who borrow the group loans, they also, if we go to so far, we do not have the specific access on their improving living standard. But in our mission and the vision, we would like to improve them. So that's why we have the group loans, and we create the individual loan that have a bigger loan amount than the group loan. And we saw that our existing group loan able to borrow for the individual loan credit that borrow from more than 100 to 15,000. And some of our clients also able to borrow our new product that we call SME that a loan more than 15,000 to 50,000. And if we go to the client detail, we see that some of our group loan clients have the improving the living standard. So that's why our grade for the social and the what we call social responsibility is a bit high from the rating company.
Okay.
Yeah.
Thanks, Janet. I've got another question. This is from Lawrence Camp. He's asking, what's the average tenor of your loans? I guess the average length of the loans, and what percentage of loans goes for investment, capital expenditure, and which percentage of all of this lending goes just to working capital?
I would say that the average loan term for the loan term 24 months. Its average loan term is around 18 months. And for the 36 months, the average loan term that the client always paid back is around 20 to 24 months. Okay? And based on our Agrifin pilot test, we see that for the working capital and investment, it represents mostly to the investment purpose. Yeah, mostly to the investment purpose. Okay,
so most of these loans are for investment, and it sounds like most of the loans are actually greater than 12 years, or I'm sorry, not 12 years, greater than 12 months in sort of average length. Yeah, is that correct?
I would say the average loan term for the Agrifin that we piloted is 18 months.
Okay.
Yeah.
That's interesting. I think the other interesting thing that you had mentioned in the presentation, Janet, is you have very flexible repayment terms. Yeah. So even though you may have a loan outstanding for 18 months, it doesn't mean that the entire balance is outstanding, that they are making some payments along the way. So it's not like they're repaying all the loan back at 18 months, correct?
Sure.
Yeah, okay.
Yeah.
Okay, so we're going to gathering up some additional questions, but I wanted to ask you, Janet, how Amaret deals with recruitment. You were mentioning that you have some challenges finding sort of the right kinds of staff to be agricultural credit officers. So I'm just wondering if you maybe talk a little bit more about that, or do you find that a lot of the people that you have as credit officers, they already have a basic understanding, for instance, of rice growing, and since that's such a common thing in Cambodia. Can you talk a little bit about staff recruitment and what the specific challenges are there?
Okay, yeah, Tom, thanks. Actually, Cambodia is the agriculture country. But if we look into the financial system industry, it's not really much more developed like the United States or the neighborhood country. So that's why, most of the fresh graduated students, okay, that they are graduated from the bachelor degree, or sometimes they graduated from the master degree, they know very well on the agriculture techniques, but they don't know on how the what we call work with the bank or the lending activity. So they less experience on that. So our challenge is that when we pilot test the Agrifin 1 year period, we need the people who are experienced with agriculture lending activity, the experience with the what we call to know the characteristics of the farmer, and also some of the techniques in agriculture activity. So that's why in our challenging is that nice to have for those of kind of the credit officer, we are a bit difficult to recruit them to join with our project. So that's why in the last minute, management decide to promote from our existing credit officer, that who are all already have the experience with the agriculture client lending activity to be the ACO. So this is the main challenge that we face.
Thanks for that, Janet.
Yeah.
I've got some questions coming in from Melina Leone, and we'll take them each in turn. First question from Melina is, have you been using the support of external consultants in order to implement this project?
Yes, sure. We are supported from the Harvard consultant. So far we have a very good relationship, and also the Harvard is the consultant is very expertise in agriculture activity, agriculture lending methodology. So that's why we have this consultant to support us.
So did you say Harvard, from Harvard University?
No, Horace.
Horace. Okay,
yeah,
that's
Horace,
the French consulting firm.
Sure.
Okay, all right, very good. Yeah. And let me ask you specifically about that, because I think a lot of the people listening will be interested in this. Are you, Amrit, paying the cost of that consulting, or are you receiving some support from external agencies in order to hire and pay those consultants?
We are, Amrit is pay to our consultant, because in the project, the 18-month project with the AgriFin program, we spend, the total cost is around $1.5 million. And the grant is $200 from the World Bank or AgriFin project is around $330,000. And the rest of $820,000 is a contribution side. So what we are used for this amount of money? So we used to recruit and hire for the consultant from the Horace to help us, to support us on the designing the agriculture product picture and methodology. Yeah.
Thanks. Then Melina also asks, how long did it take before you started the pilot to prepare the pilot? Just the pilot preparation before you began the pilot operations.
We kicked off the project in April 2013, and then we start the make a market study and divide the product picture, etc. And then we reached the pilot test by July 2013. So because of the project is quite really short, so that's why we try to what we call active and make faster on the process. So that's why we spend around 3 to 4 months of the preparation before we pilot test.
Okay, that's good. So the other question, the final question from Melina is, do you have a specific program of incentives for your agricultural credit officers? And are those incentives different from the incentives that you give to other credit officers?
Sure, because, as I mentioned, that we are promoted our existing credit officer who are experienced in agriculture lending activity. So that's why for those who are promoted as the ACO, our existing credit officer, management decide to maintain their incentive based on the last 6 months of the incentive, because incentive in our system we calculate based on the loan outstanding that they have. So that's why we keep them for the 6 months. And we know that, ACO can be reaching the full productivity around 7 to 9 months. So that's why their incentive can be covered, meaning that they can produce the more clients during that period, and then they can have the such kind of similar incentive compared to their previous position. In addition, we also what we call motivate them by the define the numbers of the client disbursed per month, let's say 6 to 7 per month. And in terms of the loan outstanding increase, the ACO can be reached easier than our existing credit officer, because our existing credit officer, in average, they disburse around $1,500 per client and in average, but our ACO can disburse up to $6,000 in average. So they are different. So that's why if we go to see the incentive level, our ACO can be get the incentive faster than our CO.
Oh, that's interesting.
Yeah.
Because it seems like you have the difference between the normal microfinance credit, which has a very rapid turnover but maybe low balance, and then the agricultural credit loans are much longer in tenor, but there's a higher amount. So, yeah, I guess it's... So do you find people wanting to be agricultural credit officers because they see maybe more opportunities to earn incentives, or is it about the same across those?
Okay, very good question. Actually, by the end of the pilot test, the one challenge for the ACO is that they disburse based on the seasonality of the clients. So 1 year experience with our AgriFin project is that ACO who are specialized only disburse the loan more than 3,000. Sometimes they are busy with the client disbursement, but sometimes they are lack of the client disbursement. So that's why their incentive is quite really a bit fluctuated. So that's why by the end of the pilot test, management decide to roll out all the AgriFin methodology to all our existing credit officer, and there is no anymore for the ACO, because due to we do not want them to focus only the agriculture upper segment, but we would like our existing credit officer able to serve them, and then we can see that the productivity and the what we call the client disbursement is seem to be what we call stable, or how I can say that justified. Yeah.
Yes, I think what'll be interesting is to see maybe in a year's time or 2 years' time how that has all worked out. That's quite interesting dynamic going on there. Yeah. I've got another question from Javier Yanit, and he's asking actually a couple things. How big do you want to get this agricultural portfolio, and do you have the resources to fund it?
Yes, thank you. Actually, in the year 2014, actually we have around 2 or 3% of AgriFin portfolio, because we have only $7.4 million compared to our total portfolio is $279 million. But in the next year, we will increase it up to 16%, of our portfolio growth.
Okay, that's quite ambitious. But I think it also shows that there's a big market out there.
Yeah, sure. Because
go ahead.
Yeah, like my slide presentation regarding to the pilot conclusion, we see that there is unserved market for the upper segment for agriculture clients. It is a potential. Yeah.
That's really a huge message from this presentation, Janet, that is so great that you're able to share that. That, a lot of times, particularly in our world, at World Bank and other multilateral development institutions, there's so much focus on the very small farmer. But what we find is that these larger, not really huge farmers, but just more commercial small farmers are better credit risk, and a fantastic opportunity for a financial institution because they're completely underserved. So that's a great message, I want to get back to, there's a second part to Javier's question also. He's wondering about the funding side. So you're mainly funded by deposits, and you don't have a problem if you go from 2% of your portfolio to 16% of your portfolio. You can fund that from your existing and or expanding deposit base?
Yeah, for on that side, I would say there is no any issue. We can grow well. As I mentioned, that in recently we have the liability is around 83% of our assets, but around 53% of our total liability is from the deposit. Because our deposit is up to September, we have around 148 million US dollars. And also we also have the borrow from our lender that like the Propoco, Triodos, Symbiotic, Ball, ICO Credit, etc. So that's why for the next year growth there is no any major concern.
So you have the ability, if you need additional liquidity to fund your loan portfolio growth, you can borrow from all of those Oikos and Triodos and others who have credit lines. Proparco, I think you also mentioned, right?
Yeah.
Okay.
Yeah.
And then Javier also asks about your asset liability challenges. Are you under some regulation about managing your assets and liabilities? For instance, you're a microfinance depository institution. Are there restrictions, for instance, on loan to deposit ratios or things like that that you have to take into consideration on the funding side?
Yes, I would say yes, because of so far in the National Bank of Cambodia regulation, we have the what we call CAR ratio, and you may be heard about the CAR ratio, capital adequacy ratio.
Yes.
That we need to be complied with. They have the threshold and also the other regulation that I'm really sorry that I do not remember well on this because I'm not really involved on that. Yeah.
No
but
problem.
I guess it has. Yeah.
Sometimes regulations are better not to think about. Okay.
Sure.
I've got some more questions coming in. I've got one from Kathy Zizimopoulos, and she's asking about the way in which you disperse and collect loans, particularly in rural areas and rural branches, and she's wondering if you use any sort of mobile payment type technologies or mobile banking techniques.
Okay, yeah, really good. Actually, the rural people, I would say they are off-road. Meaning that they do not have the means to come to pay at the UMRAT office. So that's why for our credit product, we have the back office and the front office, as I mentioned earlier. The back office is meaning that our credit officer go to disburse and reimburse at the client homes. Those are the clients who are at the rural people. And also, at the same time, thanks to the AgriFin project, that UMRAT able to pilot the what we call mobile banking. That this mobile banking actually now it is in the pilot stage that we are only collect deposit, okay, collect and withdrawal for the client deposit. But in the future, when we pilot, this is a manual saving deposit collection. But in the future, by the next month, by early next year, we will launch the technology that we call mobile technology that can be able to client can pay through the mobile banking.
That's interesting. One very unique thing about Cambodia, Janet, that you shared a little in the presentation, but it's a country that uses 3 currencies, and I think that complicates to a great degree all these kind of mobile payment mechanisms because it's the only country where you can complete a payment in 3 different currencies, which is the riel, the Cambodian currency, the US dollar, and also the Thai baht. So I think that offers some unique complications, doesn't it?
Yeah, yeah, yeah.
Mm-hmm. Okay. So I've got another question in from Lawrence Camp, and he's wondering if you are requiring from your borrowers any sort of financial reporting, and do you, when you take collateral, are you able to register a formal security interest in the, for instance, equipment or other assets that you take as collateral?
Okay, thank you. Regarding to the requirement of the financial statement, actually, we are really challenging in our client level, and not only the microcredit like the AgriFin loan 3,000, 2,000. They are the traditional farmer. They are traditional business activity. So there is no any financial record. And also we are a bit challenged with the SME market, because most of our business people in Cambodia and the farmer are the traditional and the small holder farmer. So actually in the credit policy and in our methodology, we try to construct the balance sheet, asset and the liability of the client, instead of the client, as well as the cash flow. So all of the constructed financial statement by our credit officer based on the information that we access from our client, declaration and the cross-check information, their business activity, etc.
Yeah, that's very interesting. Yeah, Janet. So basically you're applying the kind of microfinance methodology in terms of, reconstructing household cash flows.
Sure.
You're applying that even to larger, more commercial farmer households. And that's a really important point also.
Yeah. And regarding to second question, second question on the what we call the collateral that we got. Actually, based on our new system, it's meaning that, or I would say based on the land law, we need to register all the client collateral, land title or something like this. But when we register, it sometimes takes a bit long time on the registering process, and as well as the what we call sometimes the client need to spend some of the money for registering fee. So that's why due to the loan amount is a bit small, around $2,000, $6,000. So that's why we certify the loan contract and the hypothec contract only with our local authority, like the commune level, if they borrow less than $10,000.
Okay. Have you had any cases where you have had to seize the collateral? I know this is a pilot, so maybe you haven't had too many experiences there, but what challenges would you foresee in actually trying to, take the collateral if you had to?
Based on our experience, not for AgriFin, because AgriFin we have the 0% from par in terms of the non-performing loan. But based on our experience so far, we have our client have a good culture. I would say good culture, meaning that they are responsible. So that's why for all the case of that, most of the case that we are seaside the land, we always discuss and discuss with the client that the client mostly are agree to seaside their land to pay back to the microfinance. All on that, because they do not want to have the bad image, and as well as they also we are Buddha, so that's why some of them are think about act bad, you got back or something like this. So that's why philosophy, what we call psychology pressure, sometimes we are success to deal with our people clients.
Well, that's very interesting. So you have a culture of repayment that the Cambodian culture, including Buddhism, helps to support. I think that's also quite interesting point.
Yeah.
So Janet, I'm going to wrap it up here. I think we've reached the 10 o'clock hour. I want to thank you again for a very fascinating and highly practical presentation. So thank you.
Thank you very
Janet
much.
Chang,
Yeah.
and also to all of those participating with us today. So just a couple of final notes. Before we sign off, or actually immediately after we sign off from here, there's going to be, actually it's already appearing on your screen, there's a brief survey that we're going to ask everyone to fill out. It takes approximately 12 seconds to fill it out, by the way. So, and we appreciate that, and we get a lot of good information from those surveys. So thank you for doing that. And then in the meantime, if you have any remaining questions for Janet Chang of Amaret or on any other topic, you can visit our website, www.agrafin.org, or you can send an email to agrafin@worldbank.org. So on behalf of the Agrafin team, I'd like to again thank Janet Chang for contributing to this knowledge exchange. The lessons that are garnered from this webinar will help shape the way in which professionals approach product development for their agricultural clients. We can't thank you enough, Yannick, and we look forward to our next webinar, and we thank you all for your participation.
Yes, thank you very much. Yeah. Next slide is there. Yes. Hello.